Fintech's ugly month of losses may offer a fantastic opportunity to bargain hunt, say analysts. Many financial technology stocks extended a recent slump on Monday, but there may be some opportunities within that beleaguered segment of the market, analysts say. Though the SP 500 SPX turned around Monday to finish in positive territory after a tumult-ridden session, fintech names largely held in negative territory amid continued concerns about rate increases and inflationary pressures, even as those assets saw losses paired in a frenetic Monday on Wall Street. The Global X Fintech ETF Finx, one of the most popular exchange trade funds that offers exposure to financial tech companies, for example, finished the session with a loss despite a turnaround in the broader market that saw sharp, early declines for the SP 500 Index SPX, the Nasdaq Composite Comp, and the Dow Jones Industrial Average DJIA turn into unlikely gains on the day. The Global X Fintech ended Monday down 0.8%, even as SP 500's Financial Sector XX, SP 500 XLF closed up 0.2%. For example, over the past 30-day period, the ETF is down 23.2% and down 18.1% in the year-to-date. Analysts, however, see room for prospective investors to be discerning as they scour the sell-off for fintech opportunities that can turn out to be winning investments in the longer run. Monday's declines in fintech came as Bitcoin coast and Ether Ethos, running on the Ethereum blockchain, also saw a dramatic turnaround Monday. However, those assets have been mostly buffeted by concerns about a too harsh regulatory environment for the nascent digital asset sector. Fintech has been swept up in the crypto tumble partly because many of those companies are exposed to digital assets such as Bitcoin. Coinbase Global Inc. Coin runs an exchange for crypto trading, while PayPal Holdings Incorporated, PYPL, and Square parent Block Incorporated, Square allow users to buy and sell virtual assets on their platforms or are otherwise exposed to the blockchain technology that underpins digital currencies. However, analysts say investors should weigh the subtle distinctions between such fintech companies because those that have more options to drive revenue might perform better in the longer term. When it comes to crypto, we make a distinction between companies that are 100% levered to crypto, such as Coinbase, and those who benefit from crypto engagement, such as Block and PayPal. Mizuho analyst Dan Dolev told MarketWatch, "We are more worried about the former because they have no other levers to pull if crypto is out of favor. A company like Coinbase is getting more deservedly punished," said fellow Mizuho analyst Ryan Coyne. But he thinks that it's important investors can recognize the differences between Coinbase and other fintech names like Block and Affirm Holdings Incorporated, AFRM, that he sees as merely lumped in with the broader sell-off. Subscribe, want intel on all the news moving markets. Sign up for our daily need-to-know newsletter. Coinbase shares lost 0.3% in Monday afternoon trading, after they were down as much as 15.3% earlier in the session. They are down 29% over the past month. Block shares, meanwhile, also paired losses on Monday to end down 0.7% after dropping as much as 13.6% earlier. Shares ended lower for the 8th straight session and are down 30% over the past month. Affirm, which offers short-term consumer loans, saw its shares claw back to finish Monday trading up 1.1%. Though it's still off 42% on a one-month basis. Marqeta Incorporated shares MQ ended down 3.1% Monday after dropping as much as 16.1% earlier in the day. Shares of the card issuer logged an 8th straight decline. Regarding Marqeta and Affirm, they are just being unjustifiably punished by the market, Dolev said. They should shine again when investors realize that the fundamentals are going to be very strong over the coming quarters. Other losers within the fintech sector Monday included financial services company SoFi Technologies Inc, SoFi, which dipped for 0.3% Monday, and financial services outfit Upstart Holdings Incorporated, UPST, which was down 1.5%. Don't miss, SoFi banking approval cheered as significant driver shares of Visa Incorporated, V and Mastercard Incorporated, Mar each were off about 2% Monday, but Moffett-Nathanson analyst Lisa Ellis sees potential in both. "I view the sell-off as a fantastic opportunity to get into some long-term secular winners in payments at attractive valuations, particularly for longer-term holders," she told MarketWatch. Visa is her top pick, as she expects the company to benefit from factors like a travel recovery and a stronger position in Europe. She also likes Mastercard, Block, and financial services entity FISF Incorporated. Viv and Ellis is more bullish on the prospects for Coinbase, calling it a one-of-a-kind, pure expression of the secular cryptocurrency trend, offering an increasingly attractive valuation for investors willing to put up with uncertainty.